I started this week by writing about SLB's newest earnings announcement. We see in that announcement an interesting tension between the cash needed to invest in innovation, which is a theme that we see across oilfield services, versus the cash that's required to hand back over to shareholders, which shareholders expect at this point. And that tension is evidenced throughout the earnings release. We see commentary near the top of the release about how SLB is planning to transfer $7 billion over to shareholders in the next couple of years through dividends and share repurchases. But we also see a lot of commentary around the importance of innovation. And as an example, there's the ChampionX combination coming up. There's the low carbon capture, the carbon capture, low carbon efforts generally that SLB is working on that require substantial investments. And we see the chart that I showed was that SLB is returning a little bit less cash to shareholders than Halliburton and Baker Hughes when it comes to the total fraction of their cash from operations that's going over to shareholders. So SLB is living in this tension where they're trying as hard as they can to make sure that shareholders receive cash for their investments, but also retaining enough cash to invest aggressively in the technologies that will be required to differentiate themselves in the long term and to help their customers achieve all the goals that these operators have laid out. An interesting tension, and the earnings release from SLB was a good demonstration of how the most capable OFS management teams are trying to navigate through that. My next post was about NextEra Energy, the massive renewable energies focused power company. What we saw there is that margins for NextEra are staying pretty flat after having fallen going into the pandemic, having grown meaningfully coming out of the pandemic, expanded by 10 percentage points. And even with all of this macro turbulence and the increasing interest rates and the pullbacks from some of the pledges, the low carbon pledges that companies have made, that some countries have made, amongst all that turbulence, NextEra is continuing to invest aggressively in their business, and they're continuing to sustain these elevated margin levels, at least relative to where they had been coming out of the pandemic. They're not quite where they were back pre-pandemic, but the trajectory seems to suggest they'll get there before long. So it's interesting that, again, while there's so much turbulence in the space and there's lots of ups and downs and just investing in this way is becoming a lot more expensive with interest rates doing what they're doing. NextEra has been able to protect their profitability over time, and that's notable. My third post of the week was about now that we have earnings results from SLB, Halliburton, Baker Hughes, Weatherford, I looked at year-over-year revenue changes for each of those in the most recent quarter. And we see a similar story that across North America, there's real challenge there where all of them are flat to down. And internationally, all of them are growing. And then within each of those, we saw an interesting dichotomy where Baker Hughes in North America has done the best job of protecting its revenue stream. It's basically flat year over year, whereas each of the other three players are down at least 6 percentage points. The story is reversed on the international side. Baker Hughes has the weakest international growth. All the others have meaningfully larger growth levels. That's good to know going forward because the international side of the house, along with the offshore side, is the vector for growth for a lot of these oilfield services companies, if we heard through the commentary of their earnings releases. So finding ways to really lean into that international expansion is incredibly important while protecting what you can on the North America side, knowing there's not a whole lot of tailwinds that are going to help you succeed there. The activity levels are suppressed, and it's really the battle is becoming more fierce across North America. But international and offshore offers a bit more opportunity still. Each of the oilfield services companies have admitted this and are leaning into this. And this was just an interesting comparison to see where they are coming out of the first quarter of 2024. My last post of the week, I shared a podcast that I was on with Michael Tanner talking about the SLB-ChampionX acquisition. We started the podcast by just talking about the oilfield services space generally. What are some important parameters that drive performance in that space? How do you understand it, think about it, so on. And then we got into the SLB-ChampionX deal itself. So if you're really interested in oilfield services, mergers and acquisitions, I highly recommend you find that podcast and listen to it. The full videos on YouTube. I'll make sure to include a link down in the comments below this one. So I hope you had a fantastic week. I really appreciate it, and we will talk soon.